Today, we're going to be doing an amazing trade breakdown as well as covering a very, very important topic because for you to understand how I manage the position that I've taken today, we're going to go over exactly some of the most powerful concepts that I've been utilizing for the last, 4 years, 5 years. You hear people tell you a lot of different things when it comes down to trading. One of the things that you will hear a lot is that you cannot trade the news, you cannot trade around the open of market. The reason why most people cannot trade around the open of the market, so like 9:30, 8:30, or even like 3 a.m. if you're trading in London, it's primarily because they do not understand distribution or they don't have a model that distribute around those windows. The models that I trade distribute almost all throughout the day. If you get to the point where you master most of my in-depth and then high-level arcane concept models, you will be able to trade throughout the entire day if you so choose to. Now, I don't trade the entire day. I trade London session 3 to 6 a.m. If I don't have time during the evening to trade, I want to be able to like maybe make something, but no, I'm not going to be able to trade New York. But ideally, I want to trade the open of 8:30. I want to trade 9:30 open, at least the first hour to 2 hours of the open. If I don't see anything clean, I typically wait a little bit deeper into the day and then maybe look for something to deliver throughout later in the session. However, you need to understand the volatility injection. There's going to be a period of time where you're going to see volatility be injected. So I'm going to go over the list of these injection of time windows or time frame, and I'm going to discuss a little bit in regards to like what did they actually mean in regards to, let's say, if you're in a position and how you're supposed to manage your position if one of those windows is essentially coming up. So with that said, let's go ahead and go over the list. Here's the list. The most popular window, and I would say the primary window I utilize myself currently is, and I don't think I ever changed this current windows, 3 a.m. is going to be the London Open. So you're going to have a volatility kicking in there. You have 7 a.m. is also a volatility window. That's a pre-market pressure window. So a lot of the time you will see some movement. Now, if you're, let's say, for example, in a trade during London session and you see it being held, you typically see 7 a.m. deliver that move. 8:30 is another major window for volatility injection. So I call it my macro liquidity injection. And then the 9:30 open, obviously that's the open of the market. That's going to be your primary volatility injection window. And then the 1:30 is the secondary distribution phase. So late in the day, you would sometimes see the injection right about 1:30. 1:30 is kind of like the PM open for the New York session. So that's kind of how you want to think about it. Now, the reason why, like I said earlier, you want to pay attention to these volatile window or volatile injection time is because if you're in a position and your position is being held up, a lot of the time takes so much time to deliver, like 30 minutes, 40 minutes. It could be because you're approaching a volatile window, right? Or a volatile injection time. So you need to be mindful of these, right? Because if you are holding a position and your position is approaching one of those volatile injection time, price can either manipulate you against your entry, take you out maybe 20, 30 points, depending on the instrument that you're trading. It can be anywhere between 20 points to sometimes even 30 points. And it can even be more than 20 points in some cases. But on average, I'm going to give you some nugget here. I'm going to make sure I hang the bell here, but this is going to be some nugget I'm going to give you. The specific average, right, sweep of liquidity, if you are pushing a volatile window that's going to be a manipulation for NQ, is going to be 20 to 30 points. If you're looking at ES, it's going to be 3.5 points to 4.5 points on average. And then if you're looking at EU, it's going to be usually 25 to 35 points. On GU, is going to be 35 to 45 points. Now, if you give yourself a buffer, right, if you're pushing a manipulation window and then you have very, very strong conviction into your trade actually moving in your direction, but you feel like it just so happened to deliver before manipulation window, you can expect it to manipulate, respect that buffer that I just given you for each of those respecting pairs, and then still move in your direction. So that's one of the ways that you can utilize volatile injection time to your advantage, understanding what they serve, what's the purpose that they serve. So first up, we're going to go over the 3 a.m. The 3 a.m. London Open is, I would say, it's a manipulation window for certain pairs. Now, for specific Forex pair, which are going to be European, right? Most of the time you have European participants that typically jump into the market around this period of time. They jump in with dominant liquidity to engage and begin creating some of the volatility, but it does not necessarily cover all sort of assets. The 3 a.m. open, the 3 a.m. mainly revolve around, I would say the pair that are most dominant with this open are going to be EU and GU for the most part. You could potentially see maybe other pairs such as USD JPY or maybe EuroCAD. But I would say the primary true pair that you need to focus around 3 a.m. that could manipulate. Maybe if you have an entry and it could manipulate a little bit behind you and then move in your direction, it is going to be EU and GU. If you're trading NQ and ES around this period of time, you're very less likely to actually get manipulated. Price could simply be utilizing this window to continuously deliver your entry. So if your entry has been held up from 230, maybe all the way till 245, 250, it could utilize the 3 a.m. open volatility to deliver in your direction if you're trading US related asset because it is not related to that European market. Now, if you trade a pair that's related to a European market, so anything attached to EU or GU, you may potentially see that manipulation. This is what this window is for, is to manipulate European related assets, right? Anything that has EU attached to it or GU attached to it, you typically see it manipulate a little bit behind the entry and then it move in your direction. You see that consistently happen around this, but this is what this window serves. It serves as a manipulation window for European related pairs or assets. And then for anything else and related to those, you would typically see this window serve as a continuation window. I hope that makes sense. Next up, we're going to go over the 7 a.m. pre-market pressure window. This window right here is typically a clean confirmation follow through. It delivers a continuation in the expansion. So this window is not really about positioning. It's more so about expansion. Although I wrote there not expansion, but it's really about expansion. Institutions begin aligning the order flow typically for the 8:30 open or the 9:30 open. If you have any move that you're holding, there's really no reason for price to manipulate you out of that position because everything is simply aligning with something that's already in place and something that's already in motion. So if I'm in a position and we're approaching 7 a.m., I feel typically very comfortable or very peaceful. And a lot of the time, if your trade is held all the way from multiple hours, maybe for multiple dozens of minutes, and then 7 a.m. delivers that, a lot of the time you're looking at potentially you're trading on a day where you have news at 8:30, or maybe you have a news maybe at 9:30. So price is going to be very jagged and very slow to deliver to target during those period of times. You need to be paying attention to that. And 7 a.m. is going to be a window where if your trade is approaching this window, you should definitely feel comfortable letting it at least play out for the next like 10 to 15 minute past, 7 a.m. And if it's still not delivering, you may be potentially looking at the next window to potentially being utilized to deliver your entry to your target, and which is going to be the 8:30. 8:30 typically is a continuation, but in a lot of situations, it could also be a manipulation. Like I said earlier, now 8:30, we're approaching that window where we're going to be looking at assets such as NQ, EU, anything that's related to the US market are going to be pretty much going to be most of the time, I would say, a very slight manipulation. And then in some cases, it could simply be a continuation. When I say continuation, it means that it has already manipulated before 8:30. Like 90% of the time, it has already manipulated before 8:30, meaning that from 8 a.m. to typically like 8:25, 8:20, you will see the manipulation. And then 8:30 simply deliver the continuation. So that's why I did not put this window as a manipulation per se, because during the 8:30 open, if you have a news catalyst, right, that's delivering there, and then the trade breakdown that we're going to do today is the trade that I've taken today. And actually, the one of the trade that helped me hit my goal for today, which was $1,300. I did $1,300 on my live account. This trade that I'm going to be breaking down, I'm going to show you exactly how I utilize this window, and we're going to go over a live example of this. But 8:30, it differs than 9:30 in terms of behavior in this sense, in that most of the time, this is not going to be 100%, but most of the time in terms of behavior, you will see 8:30 open, have a move that has already manipulated. So you need to pay close attention. On a day where you have news coming up, a red folder at 8:30, pay close attention to what price has already delivered between 8 a.m. and 8:20 or 8:25. If you're able to catch that move and you can see that we clearly had delivered, then you can start seeing that 8:25 to 8:31 gonna simply continue that move and then essentially deliver. Now, a lot of the time people are going to say the move that's delivering after 8:30, they're going to think that it's a manipulation, but in reality, it's simply now in the distribution of the move that already had manipulated way before the 8:30 open begin even moving. So that's a little bit how it's different from how 9:30 operate, which we're going to go over next. Okay. The 8:30 manipulation window or continuation window is a bit more tricky, right? So you need to be paying attention to high impact economic data used, because they typically will be the one that inject the volatility around this window. But the way they will do it will be the way I'm just describing it right now, where you need to be paying attention what happens 30 minutes before the open of this window. If you miss the move that happened before that, anything that happened afterward, you're going to blame it and say, oh, it's just manipulation, when in reality, it is actually the distribution of that open. And I'm going to show you an example of that. Next up, we're going to have 930, the primary volatility injection. This is obviously the most popular, the primary volatility injection time. And this is probably the most consistent decisive expansion window of your session. So you get the more consistent, I would say, move and repetition on a day-to-day basis that deliver around these windows. For example, the 930 will manipulate a little bit uniquely different than 830. Like I said earlier, the manipulation for 830 typically will happen way before, but you won't see, because if you're not paying attention to what's delivering 30 minutes before the open of the 830, you're going to think that there's something amiss, right? You're going to just feel like, okay, this is just a manipulation after 830 delivering. Now, 930 is different in the case that you may have a move that had begun moving in your direction the same way that you have 830 do, but 930 will literally sweep you, right? 930 will literally sweep your low. So it will not respect any of your low because you have so much volatility coming in at 930. Most of the time, it will sweep you if you're in an entry or delivering before 930. That's why for me, if I have an entry that deliver between 9 a.m. and 9:30, now the difference between 9:30 and 9 a.m., like that first 30 minutes before 9:30 open, and then 8:30 open, is that if I find a move at 8:30, I feel comfortable entering before that, even if there's a news coming up at 8:30. Now with 9 a.m., I do not feel comfortable doing that because I know the manipulation happened typically after the open of 9:30. Whereas most of the time, the manipulation for the 8:30 window happens prior to the open of 8:30. That's the main differentiator, in between those two open. The manipulation at 9:30 could typically going to happen afterward. And that's where you need to simply wait and then still identify a move that already began moving in your direction, and then simply wait for a price to sweep the protected low of that move. Once you see that and we reclaim the order block from that opportunity, you can now trade in the direction of your trade, right? In the direction of your opportunity with the primary volatility injection window for 9:30. That's typically how it move and engage and operate with. So you just want to be more patient with this window because it can really, really blow your account if you're not careful, right? If you're trying to trade this, if for people that are trying to master this window, you got to be very, very patient and have robust mechanic rules. You're not subjective in regards to what you're looking for. It's going to be very, very important for you to do that. Last but not least, this window, I don't really utilize it as much, but it's a hit or miss, right? So if you're trading PM session, which I'm not, like 90% of the time, you can potentially find really good move up this open here, but it's really a hit or miss. So, because if 930 has already delivered tremendous amount of movement, then this open here is not going to be very volatile. However, if you had a day where 930 did not really create anything, you're going to see this window matter a lot on weeks where we have FOMC. So FOMC will be around 2 p.m. The morning session will be essentially lethargic or very low energy. And you will see 130 open deliver some crazy volatility and then behave as if it's a 930 open, a primary injection window, and deliver some crazy movement or expansion or manipulation prior to heading towards the objective or the target. But that's typically how each of these windows will operate. Next up, we're going to go over an example of a trade that I've taken, a live execution. So we're going to jump onto the chart. I'm going to show you exactly how that look like. You can visualize and hopefully see and get an idea of how to implement this live in the market. Now we're on the chart. I'm going to show you exactly what I was looking at here. As you can see right here, I have a few entry that I put on here. This is a buy entry that I have gotten into. And this is actually a trade that I've taken on my live account. I have a Forex live account as well as a future live account. I'm slowly transitioning into trading mostly live account right now. I'm trying to get away from prop firm as much as I can because I'm realizing that I'll just make more money trading live. It just doesn't make sense anymore at this point in my career. So that's just a transition I'm going through right now. But with that said, we swept this volume order block, right? And this is one of my entry pattern. Maybe down the line, I'll make a video on this. This is my strongest entry pattern that I utilize on my live account. Once we have a sweep and entry like this, so we swept this order block, right? Once we swept this and we enter, we close back above on the 1 minute right here with body. My entry would have been essentially right here or the close above that order block. But look at the time. It delivered at 8:09. So when you deliver at 8:09, my buffer is typically, like I said before, 20 to 30 point behind the sweep right here. This sweep is at 335. So 116, 115 was my buffer, right? 115 right here was my buffer. So that was the level that I did not want to see price violated between 8:09 to like 8:30. And at 8:30, we had a red folder news, okay? So we had a red folder news. This move already delivered. And for this to be invalidated, in my personal opinion, we had to first hit standard deviation false. I need to pass the lever to my target. And when I enter this position, by the way, my entry is typically like this. So my risk to reward would have been something along this line, would have been like a 2.6, because I'm not using this stop loss all the way down here. I'm just putting this as a safe mechanic, but I'm actually in my account, I have enough of a buffer to withdraw, to withstand the buffer, the drawdown and stuff. But I would typically calculate the risk like this. And then later on, I'll adjust the risk kind of like all the way back here. Now, if I lose 3 times more than whatever I risk, but because this strategy is so accurate, I have damn near like a 80 to like 89 to like 95% win rate with this model. And to be honest, damn near 100% like in some market condition. Like the loss that I will take is because maybe I'm tired or maybe I've traded too much and I miss an invalidation and I'll pretty much get stopped out. But in terms of just like if I can see the invalidation beforehand, I can get out of it and typically not lose. This model is extremely accurate. But this was the entry right here at 809. And what I was doing here, I seen that we had a red folder news at 830. So I was okay with price retracing as long as we don't take out this level down here. I saw that this could be a very good play where my original target would have been standard deviation 4 of this volume order block right here, all the way to this level right here at 358 or 360, this minor cycle level maybe up here. So essentially like a 1 to 3. But once I saw the news, I was like, wait a minute, we really don't have any opposing volume order block, opposing any sort of key level that's opposing this run here. If we begin running here and then this is delivering with the news, my take profit can actually be higher. I can actually target maybe even this major psychological level, or maybe this level of liquidity all the way up here. True target that I had was this level right here and this level right here. So I wanted to see how price moved to all these different levels. And if we just blast through my level right here without any sort of pausing, and this is delivering after 830, I would have felt comfortable holding my position from 830 all the way up until 841, 842. The reason why is because if you've been watching my video on volume candles, like I said, price will create pullbacks and create expansion based on the volume candle. So if this begin delivering, right, let's say we manipulate, I'm going to kind of walk you to the potential map that I'm seeing here. Remember, I told you the 830 window manipulate typically before, and then 830 kind of come in and deliver the continuation if you can see the entry before. So this was the entry right here. So if we are going to manipulate and follow that narrative that I mentioned, this is what's going to happen. And then we're going to reclaim this as we approach 830. And then 830 going to deliver that volatility with the news kicking in, and it's going to take us higher. If we play around here too long, right, because the next volume candle is 850, 849, somewhere around here. I want price to really get here fast, right? About maybe near to 830. If we can get to my target, this first target, I can hold this trade because that means that there's no volume candle that can potentially cause a reversal all the way up until maybe 841 or 849, right? 841 because the current 15-minute candle will start forming the high closer to like when we only have 3 to 4 minutes left in this current 15-minute candle. 830 to 845, you have a 15-minute candle. When you only have about 2 to 3 minutes left in that candle, you could potentially form the top of that 15-minute and then price retrace. And then you can potentially still have a pullback delivery with the next volume candle. But at that point, you have missed the expansion, the highest expansion of that move. So I'm utilizing AMD PO3 plus my EMD model, plus my volume candle to kind of understand how fast, because if we're essentially going to get to this level right here, it has to do it very fast. It has to do it within the first 5 to 10 minutes of the open. If we can get relatively fast here without playing around too much, if we play around here for too long, then I know my target here, maybe somewhere up here, might deliver, and that's about it, right? Because as we approach this volume candle right here, it might use this volume candle to reverse and maybe take us lower. However, if the move up here is fast, then I can hold this trade and I can let it run and then maximize my profit. This is how you utilize volume candle. This right here is an extreme gem. If you really go back and rewatch this and catch what I'm saying, that's how I'm able to risking damn near $100 to make $200 because I'm flipping an account right now for a documentation that I'm doing right now. But that's how I'm literally flipping those account like $100, $200 risking only and making 13, 1400. And some of my bigger accounts, I'm able, but barely risking anything. This is how you can scale account because when you see the opportunity, which does not deliver all the time, this could potentially be, I can see here, 344 to 400, right? This could be damn near a 70-point move, 60 to 70-point move. So let's go ahead and walk you through what exactly happened since now you guys understand. We went ahead as close to our target, like the buffer right here for the stop loss, 320, and started reversing. And then as we reverse, you see how we deliver to our first target right here relatively fast within the first 3 minutes. So I'm okay. I can hold my trade. I can let it run and then let it do its thing. And then there's a few targets that I have here, right? If we can get to this one ASAP without before 841, 843 comes, I like that. Even this one right here could be even a good target, right? A major psychological level. Those big number that ends with 2 zeros or 3 zero. Okay, we pull back a little bit. I don't want parts to play too much in this zone. I want it to like explode, right? And keep pushing high because there we go. I like that. There we go. See how we're moving higher and higher because price is utilizing the volatility of this. And then since we know we're near a volume candle, I can let this rip. And there's a few targets that I have here. This level of liquidity here, right? This is a 5 minute buy side liquidity. This is also like a 1 minute buy side liquidity. And this is also a 15 minute buy side liquidity. So this is an easy draw. So you could have taken some target right here, but we have a major psychological over here. This is very much a strong draw. Since this 15 buy side liquidity failed to grab that major psychological level, this is also a half of the objective. So you could very well target that as well. We pull back a little bit inside of this gap and boom. This could have been a target right here. And then this was a move that I caught. How much? Oh, this was damn near a 10 hour, 10.5 hour trade, right? That I caught. And like I said, I give myself this buffer. So I have enough in my account to withstand this whole drawdown. For however much I risk, I was probably, if I was risking 300 or $400 in this position, I was probably in drawdown of like $1,000 at most before price essentially moving in my direction and delivering this crazy RR. And I'm okay with that because most of the time I'm not going to actually see that much drawdown. Most of the time it's going to be look like this where it might draw me down of like maybe double of my risk or maybe sometime 2x of my risk or 2.5x of my risk at most. And a lot of the time, it's just gonna like retest my entry and then push off. It won't even go below that level where, I can feel some level of drawdown. But this is the how to utilize the volatile injection windows that we just went over. And this is also a trade breakdown of a trade that I've taken today. I hope this was an amazing, insightful breakdown for you. I hope you all learned a lot of different things from this video and this brought you a lot of value. If you like video like this, where I break down the concept and I also introduce how I utilize it, in one of the trades I've taken to read order flow, to manage my position, utilizing my Arcane concept, feel free to let me know in the comment section down below. I'm all ears. With that said, I'll see you guys in the next video. Until next time, stay in profit and peace.